Hey there, future investor. Welcome to this video where I'm going to walk you through the simple steps to invest $1,000 in the stock market and potentially earn $5,000 in 5 years. I know it sounds like a pretty ambitious goal, but stick with me and I'll break it down into easy-to-follow steps that can help you get started on your investing journey. First, let's talk about why investing in the stock market is a good idea. Historically, the stock market has provided higher returns over the long term compared to other investment options like savings accounts or bonds. Of course, there are risks involved, but with a solid strategy and a bit of patience, you can potentially earn significant returns on your investment. Now let's dive into the first step, which is to open a brokerage account. This is where you'll buy and sell your stocks, and it's pretty easy to get started. You can choose from a variety of online brokerages like Robinhood, Fidelity, or Vanguard, and most of them have user-friendly websites and mobile apps that make it easy to navigate. When you open your account, you'll typically need to provide some personal and financial information, and you may need to fund your account with your $1,000 investment. Once you have your brokerage account set up, it's time to think about your investment strategy. This is the second step, and it's where you decide how you want to allocate your $1,000 investment. You have a few options here, including individual stocks, index funds, or ETFs. Individual stocks can be a bit riskier, but they also offer the potential for higher returns. Index funds and ETFs, on the other hand, provide a more diversified portfolio and can be a good option if you're just starting out. For this example, let's say you decide to invest in a mix of index funds and ETFs. This will give you broad exposure to the market and help you spread out your risk. You can choose from a variety of funds that track different indexes, like the S&P 500 or the Dow Jones Industrial Average. When you invest in these funds, you're essentially buying a small piece of the overall market, which can help you ride out any ups and downs. The third step is to set a budget and start investing regularly. This is where you decide how much you want to invest each month, and you set up a schedule to make it happen. Even if you can only invest a small amount each month, it's better than trying to invest a large sum all at once. This approach is called dollar-cost averaging, and it can help you smooth out the ups and downs of the market. Now let's talk about the potential returns on your investment. This is the fourth step, and it's where we get to the fun part. Historically, the stock market has provided average annual returns of around 7–10%. This means that if you invest $1,000 and earn an average annual return of 8%, you could potentially earn around $400 in the first year. Over 5 years, this could add up to around $2,000 in returns, plus your original $1,000 investment. But if you continue to invest regularly and the market performs well, it's possible to earn even higher returns, potentially up to $5,000 or more. Fifth and final step is to be patient and let your investment grow. This is the hardest part, but it's also the most important. Investing in the stock market is a long-term game, and it's not something you should try to time or trade in and out of. When you invest for the long term, you give your money time to grow and compound, which can help you earn significant returns over time. It's also important to remember that the stock market can be volatile, and there will be ups and downs along the way. But if you stick to your strategy and avoid making emotional decisions, you can potentially earn higher returns and achieve your financial goals. Now I know that investing $1,000 and earning $5,000 in 5 years sounds like a pretty aggressive goal, but it's not impossible. With a solid strategy, a bit of patience, and a willingness to learn and adapt, you can potentially earn significant returns on your investment. Just remember to always do your research, set clear goals, and avoid taking on too much risk. And if you're new to investing, it's a good idea to start with a small amount and gradually increase your investment over time. As you get started on your investing journey, it's also important to keep in mind that there are fees associated with investing in the stock market. These can include brokerage commissions, management fees, and other expenses that can eat into your returns. But many online brokerages offer low-cost or no-fee trading options, which can help you keep your costs down. It's also a good idea to diversify your portfolio and avoid putting all your eggs in one basket. This can help you spread out your risk and potentially earn higher returns over the long term. In addition to the steps I outlined earlier, It's also important to stay informed and up to date on market trends and news. This can help you make more informed investment decisions and avoid making emotional or impulsive trades. You can find a wealth of information online, including financial news websites, investing forums, and social media groups. Just be sure to do your research and verify any information you find before making any investment decisions. As you continue on your investing journey, it's also important to keep in mind that past performance is not a guarantee of future results. The stock market can be unpredictable, and there are no guarantees that you'll earn the returns you're hoping for. But with a solid strategy, a bit of patience, and a willingness to learn and adapt, you can potentially earn significant returns on your investment and achieve your financial goals. In conclusion, investing $1,000 in the stock market and potentially earning $5,000 in 5 years is a challenging but achievable goal. By following the simple steps I outlined in this video, including opening a brokerage account, setting a budget, investing regularly, being patient, and staying informed, you can potentially earn significant returns on your investment and achieve your financial goals. Just remember to always do your research, set clear goals, and avoid taking on too much risk. And if you're new to investing, don't be afraid to start small and gradually increase your investment over time. Thanks for watching, and I'll see you in the next video.